Good, ready? All right, let's get going. Those who don't know me, I'm Alton O'Shields. I'm the VP of Mortgage Lending at Great, your in-house lender. Today we're just going to be talking about the home buyer process, especially on the mortgage side, from pre-approval to closing. One thing this is for clients and customers. It's a great tool to give out. You can get a program and put your information here. With both of these two slides I'll show you. And it's a good little tool to kind of keep them on track as things move through if you don't have your own tool. There's one thing here that it's not on here that's to you guys, and that is the introduction. I said that would be big step 0 when you introduce them to us. Now, there's every lender, we have a bunch that can help you, which depends on your preferred method and your preferred method. But what I will say and highly recommend is just what I've seen work the best is an email introduction between the two of us. So making that warm introduction instead of saying, hey, like call this lender, or hey, here's your email them. Hey, no warm intro. If you need help, like let us know. We have that we can give you. But I just find it creates a better environment for the client, for you, and it's just more likely for them to, use the lender of your choice, which is really important because it keeps it going off and working like Rocket or an online bank that's going to screw up your deal entirely. So it's a small little thing, but again, not everyone loves that. We can still call. They can still call us. It doesn't really matter. But in my opinion, that just works best and something else. First step that the client's going to have is we get pre-approved. So that's usually the first thing I do. Sometimes we'll have an introduction call first, depending on the client. But usually I recommend filling out the application. Use a digital application. It takes like 10 to 15 minutes for you to fill it out. It's free. It only requires a soft credit check, so there's no downside of doing it whatsoever. If you have clients who are like, oh, I'm not really sure, but do it. We can only help you. That's it. We're collecting some docs up front. Sometimes we don't have to. They can verify their assets online. We don't even need documentation. They can log into their bank account, their companies, maybe what's called work number or other things that verify it. It's got automated HR system. So we can verify everything off the bat and get that information without having to upload anything at all. And like I said, we'll get that soft credit. And from this,
do you guys also offer like pre-commitments? I don't know if you guys do that.
Yeah.
Okay.
Okay, you're ahead of me.
Okay.
But yeah, so and this is another slide we're talking about. So we'll be talking about that in here. But yeah, so getting pre-approved, start the process very early on. And at that point in time, what I like to do, and everyone has a little different way, but after I have the pre-approval, I go through it, and then I schedule a call with them. And I'm saying, hey, let's get on the phone, let's talk it out, and let's see, make sure everything's fit in right, answer any other questions that they have additionally. Let's we'll start talking about loan programs, rates, what they're looking for, what to expect, and everything like that. So that's really like when I finally have the most amount of questions is after that pre-approval, and the numbers start coming in. They're gonna have to start a lot of questions for us because obviously the next step is make an offer. Again, this is different for every lender. I personally like to customize the pre-approval for the exact offer amount that they're making. So if they're coming in, let's say that they get pre-approved for $500,000, the $350 is really the budget they want to be at. You're gonna write up that pre-approval for $350 or $360 when you go to make an offer. That way, you're not coming in with a $500,000 pre-approval, and they see that, and they're just gonna ask for more money because they know you have more to spend. They feel more comfortable. So that's one of the things that I like to do. It just depends on the person. Some clients really just want to see the pre-approval letter for $500,000. Of course, we can send it to them. That's just one of the things that I recommend if kind of help you out a little bit more. I also at this pre-approval or make this offer now. I run loan summaries for every time they submit an email. So that way you know exactly what you're getting into before you sign a contract. I do not like the approach. Here's a pre-approval. Here's a generic loan summary. Go have fun and call me for your contract. It creates confusion. They may not qualify for that particular property because if there's $1,000 HOA fee and now the DTI is too high. So we want to make sure that they know what their payments are going to be, what they're going to have to bring to cash to close, and that pre-approval that exact amount. So it's very, very important. Next step, home inspection and appraisal. You guys usually take that part on. The home inspection, pretty self-explanatory, not much on the mortgage side there. The appraisal, that's us. So generally depends on how long the deal is, what's going on, what kind of deal it is. A lot of times after the inspection, that's when we're ordering that appraisal. Ranges from around like $525 to like 650 depending on the property, the type, whatever program it is, and where it's at. But that's the refund. It usually takes about like 3 to 5 days depending on the appraiser to come back. Fun fact, the appraiser does not work for us. We are not even allowed to talk to the appraiser. We have an appraisal management group that we go through. So that's why, they don't, if you ever ask if they're going to. But we do work with some of the best appraisers in the country. They have done hundreds and hundreds of appraisers. They are very hyper localized and know the difference between one street and another. Like that school district is going to make a difference. So we can never guarantee the value is there. No lender can, because again, they don't work for that for them. But what I'll say is that if we don't hit the value, usually nobody else is going to hit the value. These are appraisers are so knowledge. We choose to work with our group. At that point in time too, we can get into appraisal gap strategies. That's like a whole nother course. But honestly, the appraisal, it's usually a relatively easy process. A lot of times we can have it done before you know. And there's actually becoming more popular appraisal waivers, or sometimes your clients don't even need the appraisal. They won't have to pay the fee. There's different variations of it. One is just if they're putting enough money down and Fannie and Freddie have enough collected data, they'll just say, hey, we know this property is good, it's okay, no appraisal needed whatsoever, and you just keep moving on with your life. There's another one that's kind of like a pass spell, where they'll just go look at a home, they won't even assign value to it, they'll just say, this home's good, and they move on with your life as well. So just an extra things, and if you have a client who's putting some money down, it's never 100%, we do have some systems that can kind of get us an idea of whether or not we'll have that appraisal waiver. But usually we won't know until they're under contract and we run it through the system when the property address is there. And we can get like 85% chance about it.
Is that based off of the age of the house, or that it's just been in the system and we know that's been through other approvals and other inspections that were cleared?
It's essentially Fannie and Freddie who are buying these loans have just collected a tremendous amount of data, and they're like, hey, 10 homes have closed there in the last year based on the homes that are around them and the percentage they're putting down. We trust that based on all this data that we've collected, that appraisal, like we wouldn't even need to appraisal, that value is good.
It's just based on the data, not necessarily inspections or a year or anything like that.
No, nothing like that. It's kind of random sometimes. Like it's one of those tools. Like people will try to overuse it and say, "Well, you might get it here." To me, it's like a happy gift if you do get it. I never really pitch it to the client like, "Hey, we can get this for you." It's never certainty because things can change. And even like I've seen it where like a slight down payment changes. All right, you lose the waiver. Like they were getting 20, now they're getting 15, and now you lost that waiver to the appraisal. So it's a happy thing if you do it. And some clients still want the appraisal. Like they want to know that they're not getting a bad deal. They can do that. What I have done is I have like appraisers that I know personally. I might just get like a private appraiser who go out there. That way it won't affect the deal. They'll give you a better discount, and like you can get the answer without it being an official document that's now going into the law. And that could, because like if they choose to get the appraisal when it comes in low, you have to go off that now. So there's ways.
Okay.
But
They can have the private appraisal done prior to closing?
like if you have like enough things, like I've only seen it one time, and it was done at the same time as the inspection.
Gotcha.
So
Okay.
that's kind of like how they got it in there, they did it.
Yeah.
And it just so happened the real estate agent's husband was, so he kind of made it happen. Yeah, so it worked out. But
Will you guys appeal the appraisal if it comes back low and there's like a huge gap?
if it makes sense, right?
Okay.
So we can't there has to be a reason for it, right? Like basically the way that works. Again, this can be a whole other course, but the way it works, if it comes in low, yeah, of course we look at it. We're gonna break it down, look at the comps they use. Are there more relevant comps that support a higher price? Is there something that doesn't make sense here? We're gonna break it down, look at it thoroughly, and make sure that there's nothing we can do to increase it. We must always do fight it if we can, but there's definitely been times where it's like you get it back and you're like, well, the other comps that they could use is gonna be even lower. It just doesn't make sense. So in those cases, and again,
What percent of the time would you say it works where the appeal comes back in the buyer's favor?
I mean, it's hard to say because it depends on the situation. I mean, if the comps are there, then 75% of the time. Like you're gonna come back and you can.
But are usually, I guess the appraisers are good enough where they got it right the first time, essentially.
Well, most of the time, yeah. There might be like some insights, some new knowledge or a new closing or something they just like happen to miss that it doesn't make sense and you can argue that point. It really just depends on like the comps that they're using and are there other comps out there. It's like it's really hard to say like, oh, on average we win 75%, like as a random number, because it is so like every transaction and every appraisal is just so different that it's like hard to base it off other facts, right? It's like you just never know. But yeah, you can't fight them, you can't argue against them. It's just about collecting the right data and knowing what's closing there. We will never like when I say we like I will never get an appraisal and that went in a low and just like whatever, let's move on to our life. But I am always gonna look at that, try to get comms, try to build whatever we can, any kind of data to help combat that and get the appraisal back. But really of it we're not, it's not something we're running into a lot of right now. Like I think out of like all my deals recently, like out of like the last 10, like 6 have over appraised and then the rest of all are appraised. So that's what we're running into. But it just depends on your market you're working on. But that was a great question. For attorney review, unless you're in New Jersey, you don't have to worry about that here. 5, underwriting. So this was your question earlier. One of the things that I like to do is when we start the underwriting process, it actually would be starting like right after your offer got accepted, we would start the underwriting. So we as loan officers, in case you didn't know, do not make the ultimate pass-fail decision, right? We take a file, we submit it to an underwriter, they look through it, they're making sure that we're not lying, and they're the ones that are like, clear to close, you're good to go. And that's going on through the process. Usually what I tell clients is there's going to be an initial submission, right? Like we take everything we have so far, we hope we get it, but it's usually rare that you're going to get every single thing checked off the very first time. And then we submit that all in, and then they come back to the checklist, and there might be 2 or 3 submissions where it's like, okay, let's document this, or let's get a letter of explanation for this, and kind of narrowing it down. And that's the way it usually goes. And we'll get to this in a second. What I like to do is I like to take number 5 here and move it all the way up and make it number 2. We have an option, it's called Power Bid. It's to help clients get pre-underwritten. And this, again, I'll go into it more, but it's like a whole other course. But it's really, really great. It's an important tool. And the reason why, for you guys, not just for us, and not just for the client, but for you, it's amazing. Because now that it's pre-underwritten, your offer that you're making with that client is stronger. I'll call the listing agent for them and say, hey, not only is this client pre-approved, we've got all the documents submitted into an underwriter, and the underwriter's giving us free. Like, good to go. So this offer is way stronger than your average pre-approval out there. It is going to close, right? So that's great for you. So it makes the offers getting accepted easier. They're first-time home buyers. They have more time when they're looking and shopping for homes. So let's go ahead and get all your documents in now. Let's get that portion out of your way. So when you do go under contract, you can focus in on inspections, on getting movers, getting out of your rent. Like, let's just take the mortgage portion out of it, and it creates for a more stress-free transaction, especially for those first-time home buyers, because now they're not rushing to get the remaining documents in. They're not rushing around, and this is another thing on their plate or on your plate as well. You already know. And then ultimately, too, helps close faster. We can do same-day commitments, so you can do the loan commitment out the same day. And then you can also close faster. If you get that commitment out day 1, you're able to move those closings like 25-day closings. I've done multiple sub-25-day closings this year, so that's very possible, especially when it's teamed up with this. So you're making your offer stronger, you're closing faster, you're taking stress off the client. And so it's really just like an overall win. And what's really cool is we're the only company that has an underwriting AI system that's approved by Fannie and Freddie. So if our AI system gets like a check mark on all 3 credit, income, assets, you're pre-approved. We don't even need to go to an underwriter. It's already pre-approved. And what's cool is it partners in with that system I was talking about earlier for the income and assets. So like in theory, this is like I've always had the one that in theory this is what happened. Client signs up, fills out the pre-approval, right? As they're doing it, they're logging in for their assets, their bank accounts. We have all their bank accounts verified, and the system gives us a check mark for assets. The company is big enough that they use like a work number or some kind of automated verification of employment. We already have their employment verified. You're good to go there. And then on top of that, once we won't know at that point in time, we can have a good guess. If they get that appraisal waiver, that's a full clear to close right there with everything we need, nothing else. If they're full-time W-2 income and stuff, we can verify it. So now you have a fully power bid, pre-approval, and then you also can get that clear to close in one day. And it closes extremely fast. And it's like, again, we'll talk more into that, but I think it's just a very important part of, it's like I think with clients a lot of times are looking for those small things that they can do to just help their offer stand out, especially if they don't have the money to bid for more down payment, or they can't short to a 15-year, or they can't waive their mortgage on contingency. And these are the small things that they can do that cost them no extra money to just get it done at an easier point in time and make their offer stand out. There's like one thing that you can take away from this course today is do the power bid, get them fully pre-underwritten. It's just a win-win for everybody.
And this can be done within, like, you were saying, like 1 to 2 days, or how?
It can only be done instantly if everything checks off. So if they come in and we automatically able to verify everything, then yeah, we're good to go. I would say generally to get them all the documents to get it submitted in, and you want like 1 to 2 days to get them pre-underwritten. But again, at that point in time, anyways, they're shopping, right? They're not under contract, so there's really no rush there. So they have the time to get those documents in and not feel rushed and answer questions and submit it. So it's just a really good tool. I've been using it a lot, again, especially for those first-time home buyers. The lower down payments, tons of questions. Like, let's get it all out of the way. And I usually joke, I'm like, you're going to go under contract, and then you're going to forget who I am until you meet me at closing day, because you'll just never hear from us, which is just a smooth process. Property insurance, very underrated part of the home buyer. Who you work with in property insurance does actually matter. It's not just about getting the absolute lowest monthly payment, which sometimes it is. Like sometimes if the debt to income ratio is really close, you want to work with someone who's smart enough to know how to hit all the guidelines, but also get that down payment, come up with creative solutions, or maybe they just help you out a little bit, help them get a lower payment, and just get into those homes. So it does really matter who it is. Generally, we start this process after you do the inspection period. In my opinion, just in the last like 2 weeks, I feel like all insurance companies are just taking longer now. So I am recommending starting it a little bit earlier in the process. But generally, it's not much. And like I said, there's a lot. Even the Sean from the in-house here is really good. It's a really good option. We're very knowledgeable. Has been doing it for a long time. So it really is important to make sure that they're not just using some random person. Because there are certain kinds of property insurance that are make or break the deal, especially with like the houses and the roofs right now. It's property insurance is a mess if you haven't dealt with that. It's a good future. Number 7, clear to close. So that means everything is in. You're good to go. Your next step is going to be scheduling to close your loan. It's like the best part all day. Like I said, if you do the power bid, you might get that step number 3 where we have the clear to close. That's everything that we have in and everything that we need. It's all good to go. And we're very happy. Final walkthrough, you know what that is, going through the day off, making sure everything looks great. And then closing, hopefully you'll see it there. I like to attend as many closings as possible. To me, it's the fun part of the job, right? Like you do all the work and all the fun stuff. It's like seeing them get the home, get the keys, be there, but also be able to explain and walk through the documents. Just so you know, I would say on average, if it's not like a bond program, our closings take 15, 20 minutes. They're able to usually hide what's called hyper close, sign 2/3, 3/4 of the documents that morning of, virtually online. We'll just sign it in the morning, kind of docu-sign through it. And the big documents we'll talk about here and have that situation here. We'll go over like the CDs, the mortgages. We'll cover that in person. They'll have to sign that. But it's a very smooth, very quick closing. It does not take long at all. If you go like PHFA, that's a little bit longer because they don't allow for it. It's still a very smooth process. And again, we're in the office. If you're closing here with the in-house title company, which I know most their settlement fee, I believe, you close here, we can be here for you, walk the clients through it. That's the fun part. And then it's very dependent on loans. So like not all loan programs offer this. but something I've seen come up, unfortunately, a lot in the last month or two. We do have full e-close options, which means the clients can close like virtually and don't have to come to the closing at all. Very, very important. Not all loan options allow for that, especially like jumbo loans, like bigger loans. So we gotta check with us first and make sure that that is possible. But it is something that we offer. It's like the easiest closing experience you'll ever have in your entire life because they just log on to like a Zoom call essentially with this online closer who just verify their ID, go over everything with them. You as the agent can't log in, we can't log in, but they'll close and go over all the documents with them, and then you'll just get your check and your very close. So those are great options in case like that ever pops up. Your client's like, I feel like they never tell you ahead of time. It's always like, hey, like I'm glad closing's the week I'm not gonna be there. I'm in like, Montana. It's like thank you for the heads up. But if that ever happens, let us know. We can help possibly if any of you guys are help get you that full week. But it's something I've done a lot recently.
And because I have to remind myself of this because I'm from New York. Pennsylvania is not an attorney state, so we don't use the attorney, so we only do the clear the quotes from the lender and that's it.
Yeah, right. You don't need no attorneys in PA. There's very little different in PA. No attorneys involved. I mean, honestly, like the truth of the matter is, a lot of times in PA, lenders don't come to the closing at all, and the title rep just handles all of it. If you don't like that, I'm gonna be there for the closing when I can for it. But yeah, so they'll just get all the documents. They'll send it to the funder from our company. We'll just make sure we have everything we need, everything signed, and
Who does that?
that's us. So we've
We
been.
don't handle the title.
No. The title company they'll handle the closing, they'll make sure everything's signed, and they send it back to us, and we just make sure that everything we needed has been signed, that we're gonna be okay, and everything's good to go.
And is that up to us as agents to get the title, like, to coordinate for them to?
It's all,
Okay.
yeah.
Because that's the part that I'm like, how does that part happen? Because typically, in New York, the attorney stands.
Yeah.
Okay.
The title company stands. It really, in PA, honestly, I'd say whatever the lawyer usually does or the attorney does, the title company's probably handling it.
Yeah.
They have a lot of their shoulders here, so.
Okay.
So. But, yeah, absolutely, it's a good question. So yeah, the title company, once they've signed everything and they've done everything, they will take those documents and scan them back in. Some documents like are required to fund, right, and some aren't, but they'll send everything over to us. We'll go through it all, make sure that it's been scanned, give our seal of approval when we're done. And then usually, depending on the company, money is really fast. So like I said, most of my closings, 25, 30 minutes, depending if they have questions or not. I've done like less than 15 people who've bought multiple times before. I was like, hey, just get me out of here. I know what I'm doing. So, but really quick process, really easy process. If you will not, and like, if your clients have bought before and it's been a while and they come and use us, they will be shocked. They will be like, and they always say something like, I cannot believe that it's this easy to buy a house. So,
I'm listening to you right now, and our processes are not like this. And excuse me for continuing to talk about New York, but that's the comparison I have. But yeah, interesting, very nice.
What grants do you work with, like Philly grants, you work with Philly grants?
yeah, so in particular, there's a bunch of us here, you see in the back as well, but we work out of this office.
No, I'm talking about like grants, that's how I'm like Philly grants.
Oh, grants?
Yeah.
We have a lot of different grant programs going on. So Philly First, that's not through any particular lender, but it's a program the city offers, and we do work with that as well. PHFA, we do a lot of, in New Jersey bond program as well, for the New Jersey world. Yeah, the PHFA is one of the most popular programs out there that we've done a lot of. So if we want just the standard one or the Cape, if they need the grant funds as well, we offer that, and we do a tremendous amount of volume. And if you're not familiar, the PHFA program is the bond program used with the state. Basically, the state buys the loan. It can be stacked on top of VA, conventional, USDA, FHA. It's not a loan type itself. It's like the purchaser of the loan. They usually have two different options. Option one is just like an extremely low interest rate, and that's the first option. The second one is they have a 5% of the purchase price, second forgivable mortgage. So they'll get 5% in down payment. The interest rate is higher, but it's usually comparable to like normal market anyway. Sometimes it's not caught up yet, but it's usually a very competitive rate, and then they get 5% of the money to help cover down payment, closing costs, things like that. They need 1,000 bucks out of pocket, but that's it. So if they have $1,000 cash, then get them all. Absolutely.
And PHFA, you still have to pay a PMI on it?
Yeah, they have their own PMI. Depending on the, well, it's the same with FHA. So if you go with FHA, PHFA, it's the exact same. Sometimes their PMIs look like more expensive than if you just left the program. But the interest rate offset is usually so much that it's like you're
That helps.
Yeah, it helps out anyways. And then we can teach them all course on PHFA. You do have 30 minutes or an hour?
You have an hour.
Oh, perfect.
You still one.
So on this portion, anyone have any other questions or just questions about the mortgage process in general?
I have a question. I'm a newly licensed real estate agent. You were talking about Rocket Mortgage. It's like not good. Why is it not good for like potential buyer who says, "Hey, I got pre-approved from Rocket Mortgage." Like, why would I steer them away?
That is 100% a great question, and it's becoming more and more important. But essentially, like, let's say you're in a competitive situation, which a lot of times you are, right? Listing agents are going to sit down and look through all the programs. They just know, I mean, if anyone who's doing enough loans in the city knows the name rate, and they know the loans close on time, that their orders are on, it's going to close on time, that we've done all the work that's required, and it's more like, the more certainty that we're going to close that loan. Whereas Rocket, sometimes you can just type in your own information, get the pre-approval, and come in, and they haven't looked at anything at all. And so the likelihood of it closing more often, if you have two offers side by side and they see Rocket and rate, they're going to choose the rate option every single time. And sometimes listing agents will straight up be like, we won't accept bank pre-approvals, we won't accept online lender pre-approvals, you need to speak to a local lender and get pre-approved with them first. You don't have to go with them, but you have to speak to them first. So we know that this is going to go through and not just some, problem child. Because unfortunately, Rocket will do that, right? They'll send out a pre-approval for $400,000 and say, go have fun. And now you're looking at they were from my single families, now you're looking at a condo with $2,000 a month HOA fee. You don't qualify at all, but you give them that pre-approval. And it's no good, you never qualify to get it. So that's the difference. They really want to make sure that it's going to close. You're doing work with the best appraisers, and you're maximizing your chance there. So it takes like,
They're not as thorough, I guess you're saying.
yeah, exactly. It's less likely to close. And it's like, it's not even like me like hating on other lenders and banks. It's just like
That's just the fact.
it is just facts. Like it is straight up facts. You're not gonna be able to get them on like a weekend if it's like a bank or something.
For Rocket, nothing.
Yeah, and you're gonna be beating your head up against the wall. So is your clients, because they've ghosted you because they don't care. They're on to the next loan. The loan's not going through. You're trying to get a hold of someone. They're not coming to closing. They're not coming up with creative strategies. Appraisal comes in low. They're not fighting it. They're just like, hey, it's low. Have fun. Like, I got other loans. Let's keep it moving. So in all of these things, it adds up. And again, it's like, not being hating, but it's like you will get burned by them at some point. And just 1 second. Yeah, I do think it's going to get to a point too where like, if you don't have your buyer agency agreement, I think they're going to start, certain companies are going to start pushing them to different agents. That's my opinion, because they're starting to get agencies underneath them, and they would make them more money. So that's just my opinion onto it. So Rocket does have certain agents that they work with that they send leads to, and then they get 50% of the commission. So that's something you just got to be wary of, or it's
If
like,
you're not part of that, they're not gonna fight.
yeah,
They're not
you
gonna
want
back
you want your lender on your side who's fighting for you, and not only closing the deal, but hey, like, I'm thinking about like going to see other properties, or like for me, I will lose a client in a heartbeat if they tell me they're gonna go, like, they might be seeing another place with a different agent. I'm telling you, like, hey, your clients are thinking about leaving before you go under contract. If you need to get a hold of them, and I'll just, I would rather lose the client than you lose that deal 100%, and that's not going to happen with Rocket either. So there's a lot of reasons, and it's good to listen to everybody and not get burned, because otherwise some people just don't, and they get burned, and then it's a bit bad.
If they come to me with Rocket, I require them to get pre-approved locally. Like, I'm not even gonna show a house under Rocket. Yeah.
Just like, so I've dealt with Rocket like 6 years ago, and it was a nightmare, and then also Quicken Loans.
Oh, same. That's another one. I know there were.
Are there any other ones that, like, when we're on the listing side and things like that, and dealing with clients, are there any other ones that we could probably, I think there's like There's something like online loans 123 or something.
Yeah, I mean, if it's a weird name,
Yeah.
off the bat, don't do it. And one that I personally hate, Sage Mortgage, the worst.
Stage.
Yeah, they're small, absolute worst. You're terrible. Any small bank you've never heard of, any small, like, if it's just something you've just never heard of, there's a reason why you've never heard of it. And again, it doesn't necessarily mean that they're bad, but like, unless they're like, if you call them and they don't answer, and you see that their number is like a Montana number, and you've never heard the brokerage, like, okay, like, it's adding up. Let's get them into a local lender, you know. There's some small like brokers out there who live in the city and know the city and they're great, and you may have never heard of them because they're not part of a big company. So it is possible. Like I tell people all the time, call your lender. Like my agents who use me, they're like, if even the client refuses to talk to me, I'm like, you need to go call that lender every single time. Say like, what's up, what's going on, what programs are we talking, how fast can we close this? Is there anything I should be worried about? You know, do you have all your documents in? Like, be proactive if you don't know the lender. And one thing I recommend for tell them too is, you know, even if they are hesitant to talk about us because they're working with their bank or whatever, get us involved. Like when they send out a loan summary, which they should always be sending out loan summaries, but you know, ask your client like, hey, is it okay if I run this by my lender to make sure that they're not missing anything? Great example. Here you go. Great example. One of my best friends, also a real estate agent, had this client coming from Texas who's buying here in Philly, and he just found some like random local Texas banks that happen to be licensed in PA. And at first he was like, yeah, he's like, you know, I just know these banks, like I know people there, I trust them, like I'm good, I'm gonna talk to them. And they send them out loan summaries for properties, and they the agent was like, hey, can I just please run these loan summaries by my local lender just to make sure everything looks good. Well, they told him, both of these banks told him there was no transfer tax in Philadelphia, which you guys know, absolutely insane, absolutely insane. So it was actually going to be like an additional $10,000 they never told him about, and we were able to get him into PHFA. So not only were we able to absolutely crush the rate and close it as a local lender, I ended up making sure, like, I was like, hey, dude, like, you're doing your work with me for the ASAP because you're gonna owe more money, and like that's not set by me. Like, they can leave it off their loan summary all they want, but the government's gonna ask for that money when you go to closing, so you better have it. And so that's the importance of using a local lender. Like, I don't do loans outside of New Jersey, PA. I technically licensed in Alabama, but I don't because I don't know those markets.
Wait, really?
Yeah, got it on my license. Why? Because you don't have to take any education course,
No.
and it's like $35.
Why is that not?
And I have friends down there.
Yeah, you just have to have a pulse.
Yeah, I'm simply in Century.
Nice.
Fun fact: no one in Alabama will do that. So, you gotta know your mobile homes in there. But yeah, ultimately,
So you guys, finance for mobile or manufacturing?
we have like been done.
Okay.
It just depends on what it is. There's like not two M's here. That's another thing. We have time. I'll hop into power bit and come back at time. It's kind of the same thing. But a little bit different. But yeah, the power bit, that's what we call our pre-underwriting process. And again, it's just a really great tool to use for your clients that help keep that pressure off them and make your offer. Ultimately, for you, it's making the offer stand out, right? If you know you're ahead, everything's in and it's good to go. I'm closing faster. I'm getting my money faster, and you know, I don't have to worry about this as the process goes on. I can focus in on inspections and things like that, and eliminating the deal. Basically, they cover a large portion of it. But it's really simple. Like I said, they can log in, possibly put their assets. We really Bank of America, Wells Fargo, like most of the time we can automatically verify their assets. A lot of times they're going to verify their income because so many people here work for like state, really big. You're getting a lot of these big hospitals, you're able to verify all that. And it's really, and then our AI machine can read through pay stubs, it can read through these verifications, and it will say, and it can read through credit reports. So it will come through, they apply, verify their assets, verify their income, we pull the software away, and that AI underwriter is going through, looking at it all and saying, yep, everything looks good, you are fully pre-approved, and it's good to go for any credit card. You're the ones that have it, so that one is closed 100%. They did have to upload a document, the whole process took maybe 30 minutes, and very, very simple, easy way to go.
Credit score, how low can you credit?
Huh?
Credit score.
Credit score?
60.
You actually can go down to 500, but you're gonna need more percentage down on an FHA. It's also very, very picky, but 580 for FHA, that's usually where you put off at. There are other options out there, but that's, you would be able to get 580. PHFA, 620 cuts, sometimes it's 660, depends on the program and what you're looking to do. But yeah, below a 580, it's usually better just like this takes the time. Because when you're needing more money, so it's free to go at 580, and you have a down payment option. But kind of getting into that, another thing that we did this year that I feel like we don't do enough options or a good enough job of talking about is rate really expanded out our like non-QM loans, like our portfolio loans. So it's like one-off loan situations, right? So things that like normally conventional, you're not going to get it through. Common types, we basically have like we can do like bank statement loans. So in case your client's self-employed, tax that factors aren't right, we can go through the bank statements and do income that way. One that I just happen to end up doing a lot, unwarrantable condos, depending on what the reason is. We have options for that. So we have, ways to help depending on what the reason is unwarrantable. And you guys know what that is, unwarrantable condo. So I'll say it for you. So when you're going to make an offer of a condo, part of the deal is we're going to pull the condo docs, right? And basically send them a little questionnaire that they're going to answer out. And they're looking at certain things to make sure that it looks good. Common things are like how many of the people living there are owners versus renters. Usually one over 50% owners. That's one of the things. Is there any active litigation? Is this thing getting sued to oblivion, right? Because like why would the lender buy this property if it's going to go under days? Things like that. There's different reasons why it may not be unmarketable, but that's a couple. One, is it like a condo hotel? Is that a problem? And the main one that's popping up right now, going back to insurance, the insurance. A lot of times they don't have the right insurance coverage. Sometimes it's because they're a small boutique. It's like 5 people, and the dude is like, he's a doctor by day, but he runs the HOA, and he just didn't know that like for standard conventional guidelines that you need this kind of insurance. I work with that all the time, helping them get the insurance fixed. We're not just flopping it. We're saying, hey, like going back to the condo, can you get this improved? But for whatever reason, if it's not warrantable, we have options out there that can possibly help. Usually the options you pay a little bit higher in interest rate, but it gets the deal done, it gets closed. So something to keep in mind there. We also have options listed base statements, just different income options as well, depending on what it is. So there's always say give us a shot because there's almost a loan out there for anything. Any non-QMs on the same thing. Bank statements are popular, non-QMs are popular.
Do you do DSCR or rehab loans?
Love it. DSCR, that's another one that's really popular right now. So debt service coverage ratio, if it's an investment property, usually you have to own a primary now. We do not look at income docs at all. All we're looking at is we take the rent payment versus the mortgage payment, and if it's at a certain ratio, you are good to go. So again, you're gonna be paying a higher interest rate. You usually need like 25 to 20% down to make it like feasible. I would really say 25, but yeah. So that's another option out there. And it's great for someone who owns a primary and maybe they don't have enough income to help like buy a secondary investment property, but they have the assets, right? Like we've known people like that. They want to start getting into that investment world, and that's how you do it. So they won't even look at their income when they ask for income documents. And the way it works is if there's rent, there's renters in there, we can look at the rent schedule. I mean, the rent payments and the leases and make sure that it looks good. But if there's not, and it's like an empty building, part of the appraisal is they'll go out there and pull rent comps, and they'll base it off that rent comp. So that appraisal, usually that's those deal that we're ordering that appraisal very early on, because if the appraisals don't, if the rent doesn't make sense, then the whole bill's gonna fall apart. So you order it pretty fast and you gotta get it out. But yeah, so yeah, people who don't have the income but want to start an investment portfolio, that's a great option. It's a very common one.
You can close it at LLC with DSCR.
Yeah.
Oh, no.
And we do all of it in-house.
Yeah, that's another
Almost all of our competitors in this city, in this area, broker a lot of that stuff out. We do it ourselves. We're underwriting it, we're closing it. the big difference.
Yeah, I'll give you two examples recently I've done. I did shore condo, it was a shore home, just did $1.4 million. The girl had a 660 credit score, was totally not her fault. It was like $100 Comcast bill, but she was making like 20 grand a month, right? It was relatively clean, but the credit score, it was a second home. Her bank wouldn't touch it. Nobody else would touch it. It was too low of a credit score for a second home. But she had the money, she had the income, it made sense. But with these non-student products, we were able to do that with the lower income, able to close the deal. And not only did we close it in 25 days. Shout out to that listing agent who told me I was out of my mind. There was no way that we were closing a deal with like and a flood insurance. There's a lot going on. We're stock units, a bunch. She's like, "There's no way you're closing this in 25 days." So we did, and I called her back afterwards. Like, you remember that? I said that. And then another one too, like great guys, I met him in person, and ahead of time, I met him on a one-on-one consultation, and they were shopping for condos for the rent out. And the place that they wanted to rent out, it was like 80% owned by one investor, which is like, no, it's all, the whole building is basically a rental building, and the investors don't want that. But we were able to get through that with one of our projects, with one of our options, and then it was actually easier for them because once you're in there with that program, you're kind of in there, and we can add stack multiples. So like they were kind of like older and didn't want to give us a lot to begin with. So we just switched it to an like unwarranted condo with a DSCR loan, so they didn't have to upload any income docs, and they closed it really fast. So just higher rate. But at that point in time, if when you're getting into that non-QM world with these DSCRs, these unwarrantables, the lower credit scores, if we're getting into that path, they're just like there's no other option out there. Like, their banks aren't taking it, like no one else is taking it, so they're like beyond hacked. Like if it's you normally getting like a 6.75, and now it's like a 7.5. Like they're just happy to get in there, and if they're able to fix the problem, then you can just refinance. There's no prepayment penalties. There's some can have it, but generally you don't.
I did a non-QM presentation in here by myself.
Yeah.
No one came.
But they knew you were giving not names.
It was awesome. It was. I could send you guys it. It's a great product.
Yeah, it's
Did
true.
you mention the 1099 too?
1099.
So they we have a 1099 program that would, if I'm assuming most of you are 1099, right?
Yeah.
Oh no, Leah's
Not
not.
me,
Okay.
I'm the only one.
Well, some agents are. Most agents are. They're essentially giving you all the credit for that. So normally you would get hit for deductions if you're 1099, which are fine. Like obviously as an agent you're going to have deductions. They're just going to take the full 1099 income and they're not going to count the deductions against you. So you're going to have more income to qualify to purchase a property. So
for investment or for?
So I believe that is for actually have the presentation.
You can do primary on that, I believe.
Oh, wow.
Yeah. I mean, obviously, DSCR, you can't do that as a primary.
Right.
I mean, usually the owner, I don't know if any investor we had doesn't require you to own a home currently. Like, like there's one-offs where it's like, I'm renting a $5,000 a month rental. But
Yeah, it's primary residence.
yeah.
Yeah, it's for like self-employed, small business workers, consultants. There's a lot of like gig workers now. You only need one, so you need 1 year of 1099 income.
And one thing I'll say too about non-QMs in general, it's like to me, it's like the laws. Like, you've ever heard like don't break 2 laws at one time? Like, don't be carrying drugs and also speeding. Like, don't do 2 at one time. That's how a lot of these are. It's like it's okay if like the income isn't there, like if your credit's not quite there, but like generally like don't try to combine. If you're gonna need more money, you're gonna need a higher income because the rate's gonna be higher. Like it's really a couple of those things all of it. It's not always the case, but a lot of times it's the case.
What's the document for that 1099?
It's a good question.
20%.
Yeah, you usually looking around like, for most of these like 20 to 25%.
Yeah, anytime you have somebody that's like an untraditional type of mortgage, they probably want to.
Like that's what I'm saying. I thought that's part of it. It's like, they love money. Like, they love you having cash. They love you having reserves. You know what reserves are? It's money in your bank account after you close. So making sure that you're not spending every penny. A lot of them like that, higher credit score. And then a lot of times, like depending on the program and what it is, they really like to see you get to 25%. Like that's really what you're gonna get like a much favorable rate. If you're getting like you have like poor credit 20% down on one of these, you're looking at a much higher rate, maybe points and a higher rate. So it just really depends. with the option. But they're great. So if you give her a client that's just like been told no, come to us. Unwarrantable condos. I recommend coming to me. I do that. I do that a lot. So,
My last question, do you guys have like an app or how's the communication between you and the client and between you and the agents or something that way, that we're notified on, getting updates regarding the process?
yeah. So there's different things. We have a whole tool that you can set up where you can provide this exact flyer in there. You can track all of your loans, but we're adding your email address in there, even if you're not using that tool.
Yeah.
Like most people just don't choose to use it, but you're getting emails to us all the way. You can also refer people through it as well. I'll send it out. It's called Agent Advantage. There's like, I mean, it's pretty cool. You get free training videos, free CRMs, loan status monitoring. All of these things are in there, but a lot of times that old-fashioned one just text it out. But if you are getting automated, oh, you cleared it closed, like an agent just texts me, like, hey, I still cleared it closed. Like, I'm like, yeah, everything's good. So you are getting those emails, and same thing with them. And then our app, we do have a rate app. Everyone, like, I showed it in here. Pull out your phone, download it. It actually truly is like an amazing app. It has a mortgage calculator in there. I always say use us to like calculate your payments. But if you're just goofing off and trying to do some rough estimates, has a really, really good mortgage calculator in there. Has some great tools on like financial investing. And also weirdly our CEOs are really big into health. So they actually had like videos in there too, like mental like stretches and yoga and breathing exercises and things like that.
Literally the first image in the thing.
We're all doing a pose, yeah.
He does like the transcendental, what's it called, transcendental meditation, like every morning.
Well,
He has like a guru come to his house.
what they're ultimately trying to do with this app is it be like your one-stop help, one-stop shop for like financial health and mental health and physical health, and put it all into one. But really, like you can, they can put updates, they can search it, and like there's a lot of things they can do. The mortgage calculator is awesome for your reason.
Now, are you guys a bank?
No, we are what's called like a correspondent lender. So you have banks who offer like basically one rate, and they handle their processes in house, right? They're doing their underwriting in house. Then you have what's called a broker who is shopping around over here, but they're also sending the underwriting out as well. They're not handling that process in house. We take both and merge the two together. So we're shopping around. We have a ton of different investors, but we're almost always doing our loans in house. So and that is a huge night and day difference. We are controlling the process. I can call up the underwriter and be like, yo, we need an answer ASAP, and just have more control over the loan process.
So you work with other banks, which is based off of each client, and then you put it together.
Yeah. So we shop. So we put it in, we submit it to a system, and it will give us like all the different rates for that particular loan profile, and we'll go through and find what's the best option. And sometimes like 9 times out of 10, no, 99% out of 100, the lowest rate's the best option. But sometimes certain investors might have like really particular rules, like let's say like condos, so they might be more stressed. So sometimes we'll do the one that deliver the higher rate and easier process.
Okay, so we're with investors and actual banks as well.
Yeah. There's big name banks, like all the ones that you know of. We're out there and they have options with them. Then there's like smaller mortgage companies, like mortgage buyers out there. So yeah, we have access to a lot of different. Like I think it's like over. Is it over 100 different investors now? Yeah. It's a lot. And even just for like standard loans, like standard conventionals, we have different options. It's not just Fannie and Freddie. We have different options out there. They usually have very low overlays. And so it's a smooth process. The client never even knows. They're just like, oh, So very good question. Any other questions on mortgages in general? Any questions for me?
This app is crazy.
Yeah, it's cool, right? Yeah, it's cool.
There's so many videos, like in the fitness thing, if you click one, it says, need help with your financial fitness? Like, that's so how does that say?
Well, yeah, it's cool. It's cool with like millennials and Gen Z because they can do the whole process through the app.
And learn how to drink more water?
Yeah.
All right, tech guys, like I think it's something like with millennials and younger, like 80% of the applications are started on the phone. And you can like upload documents from your phone. It's like someone just sent me their insurance through like a text message picture. Like that's the way it is. So it makes them on the move. They're getting loan updates on their phone, the app. They're getting notifications, and like we can do that. So like I can, if they we got it back from underwriting and they're missing something, I can from my computer add an task, hit it, and then press a button, and it notifies their phone like, hey, new task is available. They hop in. take a picture, upload it, do whatever they need to do, all from the phone. And it's just like, that's the world that we live in today. So it's, pretty cool. And then, and then we'll get a mortgage calculator along. So. Any other questions? They're great questions.
It's a great presentation.
It was, thank you.
Good job, Ethan.
And then you said we can send you what email, so.
Yeah, let me figure out.
And can we send like a profile pic too? And then you'll add it on there?
Yeah, so what I'd say is start with the name and email for now, and then I'll email you. And then when you go in to create your account, so to speak, it will ask for a headshot. But if you want, I have instructions, like, but if you want, I can upload a headshot for you. I usually say, like, if you create it, it makes it really easy. But, once you create it, I can do it all. It's good to upload on your phone.
This is in the app.
No, I think this does have an app too. It's called Agent Advantage. You might want to try. I don't have access to the agent facing side. It's called Agent Advantage. I can send out links to everybody, and you can create your profile on there and pick, whoever you want, to use. And we can help create. You can create it yourself, but again, I don't mind doing it for you. It takes me like 10 seconds to figure this stuff out. So there's a lot of different ones: PHFA, first time home buyer, like checklist, home buying guides. There's mailers and stuff in there too. So if you want to send out mailers, emails, like there's a lot. And then once you have that account, you can send leads through there. Again, I don't recommend it, but I can attach it to your account, your leads that come through, and you can get, you can see a list of all the leads in there, what process they're currently in. We do a good job on that on keeping you updated.
Okay,
You can always just be possible.
sounds good. Thank you.
Do you guys remember the one thing I said, you take nothing else away? What it was? I knew it. It's the power bill.
I was gonna say,
Yeah.
Power Day, yeah.
You guys all fell. I feel like a bad teacher.
Great for everyone.
There you go. That's
If I
good.
get right,
That's right.
if I mortgage, I make them get locally pre-approved. I also make them get the pre-commitment. It helps so much with the first time home buyers.
It really does.
Power Day,
I was
Power
here.
Day.
You'll see it just makes it really smooth and you can see.
Or, yeah, for when for our stage, y'all approval and.
Thank you.
Oh, yeah, so that, yeah.
I mean, like-
Underwriting, but it's already actively solving information, they while they're under contract.
And if you want, you can write your name and email there.
So basically.
And I'll send that.
Oh, just thinking it. Seller and.
It's already closed. It's all done.
You just have to accept our credit.
Good. Yeah, that's fun.
They're great.
So can I get one of those, like, and
Yeah.
read it off of, Agent Advantage?
You can go in there, and if not, I can have Brandon send it to you, and I'll do that. He may not know it as well, but it's actually, I think the whole company uses like the. But if not, I can show it to him.
I did it.
Did you get it?
He just gave them some.
Is it Instagram?
You're
So,
allowed.
shout out, baby. Where it is something I would never buy guaranteed or
Still not.
it's nothing's never guaranteed. What happens if they lose their job? What happens if the contract comes back and it's not warrantable? Like there's things out there that even with that, it's not a certainty. Like it's like out of the mortgage lender's hands. So like that's why I don't ever recommend it. There's times you have to do what you have to do,
Right.
to do it. And that is you are minimizing your chance of failure by doing that. But there's still like again, they get fired. I've seen that happen with the lawyers. So or right contract being on the job, we can need more stuff.
Right.
Around.
Yeah, that's cool. Awesome.
Yeah.
Presentation.
Appreciate it.
You got my email, right?
Yeah.
Okay, so you send us the
I'll
info.
get a picture of my rate sheet too.
Yeah. Awesome. All right. Cool. Awesome.
So you're not too.
It was nice meeting you.
And I say to you as well, congratulations, so I'm excited.
I am pretty excited. This will be good, very excited.
Hey, what did you propose?
I'm actually doing dental school right now, and transitioning mostly. You know, part of it.
You invite you upstairs, I'll get you one.
What's your survive? Survive 1 week. Nice to meet you. 1 week. Like 1 week. Yep. Nice to meet you.
Now, are you part of the?
Yeah, I'll be joining. I just have to finish my onboarding. So yeah, just pass my state exam. Yeah.
I passed in July, but you passed in New York.
Yeah, I had to take the Pennsylvania state exam here, but I'm already licensed in New York. So because I'm licensed in New York, I only had to do the background check and the state exam.
Okay.
So yeah. Yeah, so you're finished with onboarding, you're onboarding?
Not quite, but I'm hoping next month. Thank you so much.
Congratulations, you. Congratulations on you just moved here.
I moved in May. I just passed my state exam like 2 weeks ago, so I got to finish onboarding and yeah.
Was it hard to transfer, or is it like you had to do the whole
I
test?
had to do the background check. I didn't have to do the class. I had to do the background check. That's what took the longest. And then I had to do the state.
Checks, everything.
Yeah, yeah. But then I tried to do the state exam. And yeah, and that was pretty much it. But you just have to. Well, I just have to keep everything up to date with New York. That's it. Which is fine because I'm still operating business.
Yeah, that's good. Yeah, it's good with the attorneys, right?
Yeah, that's what I think. That's the part that I want to get used to up front, like be aware of because it's so different. The attorneys handle.
This is really good. This is like one of the first things you want to talk to your buyers about.
Yes.
So they don't have this situated.
I'll tell you, laying on that, especially when you're new, just heavily lean on this. Like, just like any mortgage questions, like don't try to answer things you don't know because that's worse. Just say, hey, speak to Alton, he's all things finance. He will answer any of your questions for you, and let us take that like stress off their shoulders. Like that's what I'm here for. Like, truly, like I don't want you worried for. I want you to forget. I want you to forget who I even am. Like, you're like, oh, that's right, we are getting mortgages. Like, that is my goal, especially in the beginning, because like it's truly too much in the real estate world to know everything. No one does. There's not a single agent, and it's just too much to learn, and you can't learn that and the mortgage by yourself.
Because you're getting a mortgage, it's such a long process, and you can be more competitive, which is great for the buyer.
I said that is close. Was it last week? But it was over $1 million deal, and I get introduced to them and closed within 25 days. So like it was just like boom, like we're moving through it, and we just made it back within that fast.
Where I'm from, that's unheard of. I'm like, gosh. Like we minimum, I don't write my offers less than 6 weeks. So and if it's FHA, 8 weeks, maybe. So yeah.
Most of mine have been 30 days or less. And the cash should close in 14 days, but.
I love that.
I don't think it
I
means I'm not getting shopped. If I'm supposed to do it in 25 days, no one else is doing that. So I knew like my bank says this, your bank ain't closed in 25 days.
Yeah.
Like, it ain't happening.
Yeah.
So it's good for us, but like, geez, they want faster, it's just less problems, less issues, and it's just getting closed.
Yeah, turn around to like where your clients, like you can get clients.
Exactly, just get everything. I don't know your pipeline and get it moving. That's like that deal that I did up. The agent told me I wouldn't do it. It was in Monmouth, which is closer to New York, from Monmouth County, and she was like, they were used to like Monmouth Beach.
I'm upstate.
Oh, gotcha.
I'm scared, like upstate.
But they're more used to like it's attorney review there, the attorney closing, and they're used to like the slower, like 45 days, bigger homes, slower.
Yeah.
And she was like, no, 45 days. I was like, 25, I will get this something done. And they couldn't get it. And I showed up at closing, and they're like, I haven't seen a lender show up at closing in like over 2 years. Because the title's there, and they have the attorney do everything. So there's like, I just popped up and set that and stuff. Man, I want everyone to know, like, I did it. I'm taking my victory about that. Like.
No, I'm definitely going to reach out for sure. Thank you very much, Alton.
I'm looking forward to all of them.